In this video, I want to go around the 34 reasons for why I'm buying NIO stock. Now, I don't want to beat around the bush, so let's just jump right into it. To start off, their vehicle deliveries have been amazing. In Q4 2021, they saw over 25,000 deliveries, over 44.3% increase year over year. To put that into perspective, NIO delivered over 91,000 vehicles in the full year of 2021, which was an increase of 109% from just last year. Or another way to put it, that's over half the deliveries that they've ever made in their entire existence of this company being around, which is over 7+ years old now. And now that NIO is actually 7+ years old, we're actually starting to see a wide selection of vehicles for customers to choose from. But the ET5 should have a point of its own because it's the car that NIO is going to be putting out next, and it's the one that's going to rival the Tesla Model 3. And NIO CEO William Li actually came out after one day after debuting that vehicle, saying that they saw more pre-orders on that vehicle than any other vehicle that they've had in history. In that same interview, William Li also stated that their growth rates for NIO have stayed above 100% in most recent years. And they also suspect that next year, or 2022, will also stay at this same growth pace. To best put it into perspective, look at their revenue, which we saw over $1.5 billion in just Q3 of 2021, which is up over 116.6% year over year, or even 16.1% just quarter over quarter. When comparing those revenues to the total size of the company, we see a price to sales ratio of just 6.8 times. And whenever we put that against other EV competitors, like Tesla, for example, we see a 22 times price to sales ratio, showing that NIO actually has a way lower price to sales ratio than the competition. And although NIO is still not profitable, we actually saw about $130 million net loss because we continue to put more and more money back into the business. We still saw a 20% decrease in our net losses overall. And not only are we bringing in tons of new sales, continuing to grow the business, but we're also making it more effective to create these vehicles. For example, whenever we look at gross margins. In Q3 of 2021, we saw our gross margin actually land at 20.3%. Just last quarter, it was 18.6%, and then going even further back to last year, we saw it at 12.9%. And add in the fact that we're seeing heavy supply chain issues that are making a nightmare for the auto manufacturing industry, it's insane to think that we're continuously climbing on our gross margin. This should get better by the end of 2022 and into 2023. And if it doesn't get better immediately, we can weather the storm through these bad times with assets on our book of around $10.7 billion US versus liabilities of around just $6.4 billion. But there's a lot of signs showing that the actual storm that's clouding over this electric vehicle and battery manufacturing departments are actually starting to clear already. With one expert in the field saying that in 2022, the price of lithium will still see a slight increase, but by 2023, the price of lithium should actually drop back down to reasonable ranges. And then what also helps NIO stomp out the competition is their ternary lithium-ion battery packs. This is their own battery pack that is patented for NIO. These battery packs should help a lot with the low temperature performance of the batteries, also the battery charge detection, as well as just the overall range that the batteries can hold for how long the cars are going to drive. However, Tesla seemingly goes after a good battery length whenever it comes to their performances, but then an amazing performance whenever it comes to their acceleration on their vehicles. Now, NIO kind of flips that on its head. They do about a good acceleration whenever it comes to their cars, but an absolute amazing performance whenever it comes to the length of their batteries, with some of their models hitting over 625 miles or 1,000 kilometers on a single charge. NIO also takes an amazing approach on how they even charge the batteries, and that's through NIO's swap technology. I'm assuming if you're watching this video, you know enough about NIO to know what this does, so I just want to bring out the highlights. The first being with NIO Technology 2.0 that allows their swap stations to actually charge up to 312 different batteries every single day. But not everyone can use this product, as you need to actually have their battery swapping technology, or battery as a service, which is actually $150 a month. And whenever you go to choose this amazing service, it can also take high discounts off of the initial price of the vehicle that you're looking at. And as of February 1st of 2022, NIO has built over 836 power swap stations, 3,766 power chargers, and 3,656 destination chargers. This expansion really is the true test of how, NIO is going to be building out their true ecosystem. And that competitive advantage for NIO actually building out this energy distribution is what's allowing them to actually build over 4,000 power swap stations by 2025. The world's largest gasoline retailer, Shell, and NIO will join construction and operate battery charging and swapping facilities. NIO and Shell plan to install just about 100 swap stations in China, but they want to expand even further into Europe, which is actually going to help NIO grow into different countries. Another great thing about this NIO battery swapping tech is the fact that customers can actually upgrade their batteries without actually having to swap out for a whole new model of vehicle. By purchasing the battery upgrade just directly on your console, the next time you head into a swap station, they'll just take out your older battery and replace it with a new higher end battery that might have even longer range. All this just adds to NIO's competitive advantage and why you might want to choose their vehicle over another's. Although NIO's left it pretty open for other auto manufacturers, saying that we will actually give out the designs and you can make the batteries for these specific criterias and we will swap your batteries for you for a certain fee, obviously. And it's a heck of a lot easier for me to want to hold NIO, knowing that China is actually loosening a lot of their regulations since they've actually been cracking down on some of their tech companies and delisting some companies from American stock markets. Now that foreign investors can feel more confident in investing in Chinese companies, it makes NIO a prime target for new investors to want to get into the EV markets. And you're kind of seeing that already as we see institutional holdings go up to 39.2% for NIO, or whenever we look at the inverse relationship, only about a short interest of about 3%. And in recent years, they're actually treating their investors quite nicely, the people who hold this stock. Whenever we look at outstanding share history, we don't see much dilution for shareholders at all, which is good. And there's a heck of a lot more to grow into on this company. Like whenever we look at the total global addressable market for the EV sector, we see that EVs in 2021 were valued at $287 billion. This number is projected to grow to $1.3 trillion by 2028. That's registering a compounded annual growth rate of over 24%. Just to add on to this, out of all the regions in the entire world, the Asia Pacific market is the fastest growing EV market in the entire world. To put it into perspective, China was supposed to grow their EV market by 40% in 2021. In reality, we actually saw a growth of 153%, an absolute shattering of what they were expecting the number to be. So China is a great place to grow into, but that's not enough for NIO. So they're actually growing out into Europe this year, currently planning on entering Germany, Netherlands, Denmark, and Sweden in 2022, with 25 plus countries added by 2025. And not only are the people and the customers that are actually wanting these products because they're better than the old gasoline products, but so are the governments because of climate change incentives. So the companies that can make a cleaner product are going to be incentivized and get pushed forward. So we're actually in the right sector that are doing the right things. And you can see that growing demand for our product whenever you look at our capacity for production actually hitting by the end of 2022 of 600,000 vehicles. How are we going to do that? Well, a large part of it's going to be through NIO Park. Okay, I'm not joking here. 16,950 square acres of just auto manufacturing dream. And NIO is only one company in a group of companies trying to add to this value chain to try to bunch up a bunch of top-notch talent. And you're going to need a lot of talent to make these vehicles because they're a very high-tech vehicle. Whenever you look at that, these vehicles come with 11 8-megapixel cameras with what NIO calls ultra-long-range high-resolution LiDAR, along with 5 radars and 12 ultrasonic sensors, with a bunch of other technologies that come along with that. NIO will also be in the running to try to achieve that fully autonomous fleet, the same sort of battle that Tesla is going after. And with management as young as 48 years old of William Li, brilliant CEO that's put this company together over the last 7 years, it's absolutely true that we could accomplish this. And all of these points put together are why the average analyst is placing this price target on this company of $59.46. That's an upside of over 150% on my money as of recording this video. So no wonder I'm buying this stock. But if you guys want to see more videos just like this, make sure you guys hit me a like and subscribe down below if you want to see more financial content just like this.